Hello all and welcome back to mentfx. In this episode today, we're going to take a quick look into setups, losses, partials, and how to basically go about certain trades. So again, as you all recognize, as we continue to make these videos and put them out for you, a lot of smart money and the way it is taught thus far is relatively similar, right? The only difference between many smart money teachers and the places where you learn smart money is ultimately the way the lessons and the way the knowledge is delivered to you and the mentor that is doing it, right? So by no means am I the founder of smart money. You all know this. And by no means am I the very best. But what I do know is that I understand how to explain the concepts. I understand how to get in depth into entries, into how we can get entries, and how over time you can make yourself profitable if you follow a consistent set of rules and how to follow those. So just recently we had our webinar for the mentorship where we spoke about the mentfx block. So again, I coined it for the fact that it's something that I haven't really seen anywhere else online, and we have what we call the mentfx block. Again, as you can see here as we kind of go through it, the entries are not perfect, but the cool thing about the mentfx block is that it's a very dynamic strategy. It can be applied to any time frames. It also helps you in selecting POIs because, as you guys remember, as smart money traders, we are more so the wait and enter kind of people, right? Where we're waiting for our POIs to be hit, our points of interest to be met, and then looking for confirmations in the form of Wyckoff, order blocks, and efficiencies, and all the things that we have so far gone over on this channel. So the mentfx block, it's a few different ideas, and with the concepts merged into one way of looking at the market that can help you get into multiple entries on the way up. But we're not going to talk about that so far right now. Actually, we had somebody else hit a nice trade using it. But the point of this is going to be looking at how sometimes you can take losses and what you're actually doing as a smart money trader. Okay, so we're going to go into our mentfx trade ideas because I'm not sure exactly where we're going to start this, but these are a little bit of mentfx entries. We're gonna get past those. Just a little POI we were looking at. If I can find this, that'd be fantastic. I do believe it was on. Yeah, so what's interesting is we're going to go over this setup right here. It was a CAD JPY setup where we had a POI that we were interested in, and we began to see Wyckoff unfold within it. And again, as you can see already from the picture itself, you had opportunities to get involved on the order blocks that formed along the way up, especially after the Wyckoff had already formed. And a lot of you can see that snowflake rule again applying. You have a ton of Wyckoff in here. You have the Wyckoff of this major area here, the Wyckoff within here, and the mini Wyckoff within here that you all could have been a part of all the way through. But I had certain criteria I wanted to get met. We spoke about this a little bit in the mentorship, but ultimately it's the same thing. I was looking for structural breaks higher. I was looking for that POI to be an area that seemed to be respected well enough and got involved as a result of that. So what we're going to do is we're going to kind of go over that a little bit to jump into what surpassed over the last few days and just show you guys what's going on. So excuse me if the screen is a little bit laggier. Hopefully a lot of you can see this a lot better because I am recording this on my laptop. I'm just sitting up in this little apartment building's like balcony. So hopefully the sound is very good too. Not exactly sure. There's like music playing in the background, but I'm not sure if the mic picks that up. Either way, what we had was, again, we're not going to get too in depth about what these areas are. However, as per the mentfx strategy and as per a lot of smart money, we have areas and POIs that we set up prior to the week happening or during the week and expect certain things to occur at those areas. Unlike retail, where we're kind of watching every single price action movement and trying to be reactive to what the market is doing, we kind of sit back, wait for the market to present us those footprints, right? And use those footprints to get involved if there is anything that that smart money wants to do at that point, right? So all of you have to again recognize that what we're doing is finding the footprints. When we find the order blocks and all this stuff, this is finding areas in the past that have already had what needed to happen, right? So at those points, those are points that are already showing you that in the past people have been liquidated. People had orders placed against them by way of the composite man and then liquidated and taken out for the composite man to make money. Now we're using those footprints with the understanding that those areas will function as an area where mitigation will occur. So that is why not every order block will hold. And not every inefficiency will hold, not every imbalance will hold. That's just the name of the game, right? We're ultimately paying the market maker sometimes using our losses for signals, if you want to think about it that way, right? The composite man is the signal provider. We're paying him in our losses sometimes to get those significantly bigger wins if we understand how to enter, right? And over time, as you start to formulate your own strategy using the the arsenal of smart money concepts that you have now available to you, you'll be able to basically become consistent doing that. So again, before getting too deep into this, we're going to talk a little bit about risk management and how you can basically be making money even if you're losing money, or understanding how to properly partial. So this will also influence your win rate, your strike rate, and how often you get involved in the market. Because the thing is, with smart money, you could be a 10% strike rate trader and still make money, but you could also be a 90% strike rate trader and make money. You could also be a 95% strike rate trader, where basically you don't get stopped out 95% of the time, but make less money, but make it more consistently, right? So there's multiple ways to approach the market. That's why it's so interesting to be in part of our mentorship. You see a lot of people develop their own mini strategies, right? Even though we all employ similar concepts, we might be trading two different biases and ways in certain price actions, still making money. Because what matters is the way you adopt these concepts and make them into your own strategy. So again, we had this POI right here, okay? And that POI was based on some structural play, probably on a higher time frame that we had refined. So again, if we want to take a look at this just very quickly, I do believe it was somewhere inside of here. Yes, it was. So let's ignore the stuff down here. These were some nice trades a few weeks ago. We don't have to look at those right now. Ultimately, we had this entire block right here. This, again, as a lot of you can remember, within a wick, what we usually have is some kind of down move, up move before the continuation, right? So again, what are we expecting? At that wick, or about the middle of it, we're expecting that mitigation before some kind of move higher. If there's any higher movement that still needs to take place. Again, excuse my very crappy drawings. I'm on a laptop right now. But we had that area refined. So let's get back down. It doesn't really matter too much that what area exactly it was, right? What matters is how we got involved. So what's cool about smart money, and we spoke about this a little bit in our previous webinar, is that you can have a multitude of ways to spot POIs in your trading, right? What's interesting about smart money is that you can ultimately use pivot points, you can use support and resistance, or you can use trend lines even, right? You can use a myriad of different ways, or even indicators, to determine certain points of interest in your charts. You do not have to use, hopefully this loads. Here we go, and we'll zoom back in so you guys can see the markups. There we go. You do not have to use our way of finding to find order blocks, to find imbalances, to find supply and demand zones, unmitigated ones, to find order flow on the monthly to the weekly. You can be using a myriad of different things to find POIs and waiting for confirmations within those POIs. The cool thing about smart money is it can be adopted in almost any way, because if you guys remember back to the video we made on support and resistance, where you can ultimately put together any line on the chart, right? If you just draw a line onto the chart, eventually that line is going to have some, as you can see, right? I just drew this randomly, but that line is going to have some importance. And what's interesting is if you have lines on the chart that you have a way of defining every single day, every single time, every single minute, every single week, right? Whatever it may be, then when price gets to that area, that's where you can look inside for a confirmation. And if you get that confirmation, that gives you smart money like setups. So in the form of structural breaks, or Wyckoff distributions, or Wyckoff reaccumulations, where you can trade the distributions down into that reaccumulation, right? That is where the importance of partials and break-evens come in handy, because you can't always be sure. Well, we can be more sure trading properly with smart money trend in mind, with structure in mind, because when you have that in mind, that's when you start getting extremely higher RRs. So what do we see here as price makes its way into here? So that's, again, this right here, which we sent out beforehand. Again, I was doing this kind of live with people. We were talking in the team thoughts and all this stuff, so I can't really bring that up right now. We have a lot of stuff going on in here. A lot of people trading the mentfx block right now, and we're just testing that. But ultimately, let's talk about what we had occur. So we had this POI, and again, like I said, this POI can be based on any factor you really want it to be. But in our case, it was a refined order block where we were expecting price to potentially stop and continue to new highs on the 4-hour and 1-hour structural plays, right? But that's not always going to be the case. So what's interesting about this trade? Well, here it is. We have our selling climax, our automatic rally, right? So again, we have the preliminary support, which is just a fractal redistribution ultimately, right? So usually preliminary support or preliminary supply, write this down because it's kind of important, acts as a lower time frame distribution or accumulation. So in here, if we went to a lower time frame, so even the 5 seconds or 15 seconds, you'll actually most likely see, you'll see that selling climax, that buying climax, the AR, the ST, and up thrust, the test, and the continuation is lower. So this whole area here is actually represented by this ultimately, right? And you can kind of see it just by looking at it. Here's that UTAD or maybe a UT. It might be one of those type 2 schematics, your test, right? Your LPS and your continuation lower. That counts as a preliminary support. That's how we find it ultimately. You have your selling climax, which is just basically the climax of all the orders that came into this market at this time, right? The automatic rally, which came just off it. You might have used this and used this as a sign of strength. Either way, it doesn't really matter. What's important is you understand that the creation of liquidity is beginning to happen. We're creating liquidity here, because remember, under every swing high and swing low, we are creating liquidity in the market. What does that mean? There are stop losses and buy stops or sell stops at those areas, right? So when we liquidate them, it's for the purpose of picking up more orders. And when we undergo accumulation or Wyckoff, for instance, that is just a transfer of what? Buys to sells on behalf of the composite man, or sells to buys, ultimately. That's basically all there is to it. Right? So we have that ST get made, which again is much lower than the selling climax, which is fine, doesn't really matter because we're watching as this market develops. That ST and B gets created, that spring, right? And then we have that move up that starts to break structure impulsively, right? You can see the impulsiveness in this price here. So at this point, you can already be involved on the order blocks within this area on lower time frames if you're watching it. So again, forget that we're looking at a 1 minute chart. This chart could just as easily be a 5 minute, a 15 minute, a 1 hour, a 4 hour, a daily, a monthly. It doesn't really matter. Right? If you're a swing trader and you find that you don't like the small time frame type of stuff, you'll be on the smaller on the higher time frames, and this same thing will happen over and over again. It will just happen over a longer period of time. That is why day traders like me and the people in my group and a lot of the funded members specialize in using the daily areas that get mitigated multiple times to get involved in using confirmations of lower time frame setups, so we can get involved on the same area multiple times and make money multiple times before the real move happens, or before that area gets liquidated and actually does not hold as an order block. Because again, what happens, not every block will hold, not all structure will hold. However, more often than not, it will. So even if you trade that specific way, you're going to make money over the long run, given that your psychology does not fuck you up, right? Because ultimately, you all understand psychology is ultimately the thing that fucks a lot of people. So we make the spring, we come and break above the high, right? Making this high here, and we come to test that spring's order block right here, and that's already could be your first entry. And as you can see inside here, just taking a look at what might be in here, what do you start seeing? There's most likely accumulation happening there. In what sense? Here's your selling climax, your AR, your ST intermediary, the liquidation of that in the form of an ST in B or spring, right? The move away that breaks structure, and the tests of that area before even higher prices are met. So again, this on its own, just this mini explanation of what occurs on a fractal nature, right? So this is a 1 minute chart, but you can already see that there's, again, that snowflake rule, that Wyckoff occurring even within here. So with that in mind, a lot of you can start to see how you can really stick to one currency for the rest of your life ultimately and learn it in and out. That's ultimately what the goal is of a lot of people in our mentorship, of a lot of people that are paying and looking at just one market. You start to slowly realize you don't really need to be staring at 5,000 different charts. All you need is one, right? And ultimately, once you have a POI, why is that such an important thing? Well, like we said earlier, retail traders are looking for let me just make sure this is recording. That would really suck if we're not. All right, yeah, we are. Fantastic. So retail traders are always looking to be very reactive to the market, right? They're watching the candles form on their time frame, whatever it might be, and they're getting manipulated because of the way the candles form. They're very emotionally built, right? What are we doing as smart money traders, though? We're analyzing the market from an institutional perspective, imagining what had surpassed and what might happen, right? Now, using that information based on structure, based on Wyckoff, based on potentially the confluence of volume or other factors, right? Depending on what type of smart money trader you want to be, you put that stuff together to find out where your POIs are. Now, when you have a POI, you are waiting for price to get to your areas before you look to get involved. And then you can get involved on the moves up in the form of OB 2.0s, right? Because once you have a Wyckoff accumulation, something like, so again, you have Wyckoff accumulation here. If we just move out of price for just 1 second, right? If you have Wyckoff accumulation occur, so you have a preliminary support, selling, you have the preliminary support, selling climax, AR, maybe an ST creating equal lows, right? So it's not always going to be by textbook example, right? Maybe move up, an ST and B, maybe some kind of move in here, right? The liquidation of that by the spring, right? Some kind of move up. Already the test happens. You get an LPS. Structure starts to shift bullish. You start to break structure very heavily. You have LPSs being formed, right? And then on the way up, you have OB 2.0s that form where you can look to be involved, right? And then the markup occurs. So again, the cool thing about understanding this right here is that you don't have to just be involved on the Wyckoff that forms. You can be involved on the markup as it begins, because if you're trading institutionally, then a bias can hold for a while until it is traded through or undone, right? So that higher time frame order block that you're looking to enter off, if this was your POI right here, right, should hold unless it wants to have structure change and go through it, and then at that point, you know, the bias will change and we'll approach the market from a different angle. But what's awesome about smart money is that this will occur fractally and over again. So this 1 minute setup here could become a 5-minute accumulation, could become a 15-minute accumulation, could become a 30-minute markup, could become a 1-hour markup, could become the 4-hour structural plays that meet new highs. And you can be a part of every single one of those moves up if you want to be. And that's all on one currency. So understanding that can all happen on one currency is what should push you away from the notion that you have to be staring at 15,000 markets or even 5 markets and stick to 1 or 2 markets total. Right? What I always say is master one currency pair, master one market. Doesn't really matter what it is. You've mastered the rest of them, because then you can literally branch out to any stock you want, any commodity you want, any indice you want, right? Maybe you want to move from the one currency you mastered to something that's more volatile, something that moves around more because you just want to be involved more. And you can do that because different currencies don't really move differently, right? They have the same staples of everything we teach. And if you understand how to institutionally look for something to occur, whether it's by way of studying my videos, whether it's by way of being in the mentorship and working with other people, whether it's by way of understanding the new and more in-depth concepts that we cover in the mentorship, like the mentfx block and why it forms, then you can become consistent and do it on any market. So again, we have this Wyckoff accumulation occur. We get this test and we get the move away occur, right? The impulsive moves up. Now at this point, what can you do? You can already be involved on the order blocks that form, the OB 2.0s. If you haven't seen the video, go check it out. That form on the way up and catch those to the high side. Okay. So what's interesting is we began to see this play out. And at this point, I was still not involved in this market. The market came back down, right? Liquidating more positions. What again? So I hope I can go with the replay tool here. I'm on my laptop again, but hopefully this should work. Is this going to allow me to click? Oh, very nice. All right, so we're just going to click this into existence. If it loads, beautiful. We got that going now. So, and let's move this over here so you guys can see what's going on. We're going to play this out very slowly. This is, again, so we were doing this live, not in a video or anything. We were just in the Team Thoughts channel on our mentorship. Just I was talking to someone that was looking at this market at this point, and I actually ended up getting involved. And you'll see how in 1 second. So again, we had multiple opportunities to get involved. And if you had the lower time frames and you were looking inside here, you've already been involved in a position that you might have been already put to break even or even partialed on, right? Because partialing should occur usually at liquidity levels unless you want to hold for those higher time frame structural plays, right? I usually like to partial early. And I do that because I like to always take something off the table, so I just don't care anymore about the actual position. It's a great way to approach a position psychologically, even though over the long run, technically I'll be making less if you want to think about it that way, because if you hold these positions that go 1 to 100, right, it's going to be fantastic. But guess what? The likelihood of that happening is not always 100%, right? So most of the time you might be breaking even or even taking a loss. So again, we have that break up giving us that very normal sign of strength. So again, you can label this, you don't really have to, this is up to you. So here's your sign of strength that gets put into place. And now at this point, again, you can be involved on the order blocks that form here. You can be looking inside here for the Wyckoff that's forming. So again, you have the selling climax, the automatic rally, the secondary test, the sign of strength, maybe an STNB or intermediary secondary test, and you have the spring, right? And then you have the break up. Maybe you look for tests before you continue even higher. So let's take a look at what actually occurs. So at this point, I was still not involved in this market. I could have been, but I wasn't. If I was looking at it on a lower time frame and I saw this play out lower, I might have been involved and it would have been great, right? We would have taken a great, great wins. So let me get rid of all this stuff so you guys can see this live. Here we go. There we go. Fantastic. So, and now let's play this forward. So price ended up playing out, breaking up through some highs, right? And breaking even higher. Let's see if it actually broke that as well impulsively. I think it did. Right, there you go. So we started breaking out of this area. And at this point, this is very much so a accumulation schematic, right? It really is. And what do you see as an area, that the last area that it could possibly come to test? So there's actually areas in here which might be acting as order blocks on lower time frames. So we could have been looking at those areas. Or what you'll notice is there's this order block that gets traded through, which at mentfx we call the structure block, and we go over that a little bit. But there's just an order block that gets traded through. There's imbalance left here, and that's the area where I was looking to get my entry. And that entry was going to be based right there, and we were looking to take it significantly higher, right? So we're not going to go out on the higher time frames right now and find those higher time frame areas we were targeting, but this is ultimately the areas, we were targeting much higher up. I think it was like a 1 to 70 we were targeting or something like that. So let's now play this out. So price again starts taking off without us, which is fine. We understand that price can always make a retracement back to our area, especially with structure, especially with the markup, and especially with the fact that the OB, just a normal OB or OB 2.0, whatever you want to call it, based on what's forming off of all this, is in this area right here. Okay, so price comes back down and taps us into our entry perfectly. Okay, now at this point, I ultimately want to make it potential partials above this high or even a little bit higher, right? Like I said, I like to take partials early, which is not the same for everyone. Everyone has a different way to approach a smart money trade. Some people like to hold their 1 to 20s, 1 to 10s, or even 1 to 70s full on, right? You're crazy if you do that, but congrats to you. Your psychology is much better than mine, most likely. But at this point, price taps right into our area and then begins to take off. A little bit slowly, right? A little bit slowly, and then it finally starts to make its way up. Now, at this point, what's interesting is I was actually on a 15-second or a 30-second chart. I think it was a 30-second chart. So we're going to go to the 30-second, just take a look at this. Yeah, we were. So on the 30-second chart, right? Again, we're just going to keep playing price, so everything's the same still. So keep in mind that you don't have to be on these low time frames. I like the lower time frames because I like to trade throughout the day, and I'll find setups back to back sometimes and just look at the setups throughout the day on the lower time frames because it'll just give you more setups since everything is fractal, right? If it can repeat on a daily, a 4-hour and lower, then it can repeat on the 5-second, 15-second, 30-second, right? It's just a question of can you spot it? And as you can see, the price action is pretty good here, so why not? At this point right here, what's interesting is this is when I broke even on this trade. Okay, so this trade is only up, I think, like if we just look at this, like 1 to 4, maybe 1 to 5. And at this point, I was break even. Now, why? Well, structurally, what have we done? We've put in a low, we put in a high, and now we put in a higher low, and now we put in a higher high, right? So this is just normal, basic structure. And the idea behind this is, if prices were to make a retracement, they should only be to a maximum of this area here before continuation's higher, right? But instead of that, I think prices come back down, but we don't care about that right now. So at this point, I was already at break even. Actually, I put my stop right here. So I actually locked in like about $100 on this because it's my FTMO account. So they're much higher leverage. So like just this mini move right here was 100. I think I was risking about 500 on this move right here. Looking to get those significantly higher prices. Also, anything I say here is actually for perspective purposes only, so please don't sue me. This is not telling you to invest in anything right now. So at this point, I was at break even, expecting that price would maybe make a retracement to this area and then continue significantly higher. Now, instead of that, what happened instead, right? Prices just took off right through it. And why did this not bother us, or why were we happy about this? Well, one, because we secured a mini take profit. Doesn't really matter. It was tiny. Doesn't affect anything. But the best part about it was that we didn't take a loss. And it was based on understanding why the market formed the way it did. So again, there was nothing wrong with getting involved on this. They're gonna, or some of you might have even taken a loss here, right? There's going to be a time where you guys will take losses using smart money concepts that give you perfect setups. That is going to happen. That is perfectly normal. Now, the important thing is that you don't get emotional over it and start to risk everything and revenge trade this shit out of it, trying to make your money back, because there's always going to be more setups, more RR to catch, right? When I was thinking about this earlier today, think about the little, if none of you have seen Nemo, then like, I don't know where your childhood went, but think about that fish in Nemo that has a little light in front of him, right? The little light bulb shining off him. We are ultimately that fish in this market, right? What he does is he just has his little light and he's just chilling there. He's just chilling in the water, waiting for fish to come and swim by his light because the little fish are attracted to the light, and he just eats those fish. Fantastic, right? We do the same thing with POIs and smart money trading. We have a POI. That's our fish light. If anything comes into there, we are interested in being potential buyers or sellers in that market. If price doesn't get there, right? If price stopped here before my actual POI was met and started making its Wyckoff accumulation and taking off, I would not be interested in what's happening here until I see much higher structural breaks or another markup occur, right? Because this is my POI. And if my POI isn't met, just like if no fish comes into this bigger fish's light, that fish is not going to eat, right? But it's also not going to go crazy and start revenge swimming through the deep end of the sea trying to find fish, because then it's going to get into some deeper waters and get eaten, right? Or something like that. I don't really know. I'm not a biologist. Wait, a marinologist, whatever they are, right? I'm not any of that. But the idea is you are just waiting. There's no point for you to get involved and to revenge trade or think you missed a trade, because there's always going to be more opportunities, especially given that you can be on almost any time frame, on any market, multiple markets, right? And you can basically get involved on any of those. So instead, what happened? Well, we had this lower POI, and again, I did not take this. We had someone catch this, not the same way that I caught it here, but let's take a look at what actually occurred. So we had this lower POI, and we actually had that refined to some areas around here, but we don't really care about that right now. Again, this was not sent out. This is for educational purposes only. Do not ask me to show you proof of this trade happening. The point of this is that we have a POI. We are waiting for the same things that you have been taught day in, day out, week in, week out, and in the mentorship, and we're going to just show you how you can be involved in areas like this, okay? So this wasn't taken by me. This was taken by someone else in the group. Someone else had caught this. I had caught this one. Took a mini profit on it, even though technically I shouldn't have, right? Because I have a way to approach my trades, and I understand how I want to approach them when I do. Anyway, let's play price out. Again, what's happening here? At this point, even smart money traders that have a POI here will start to see this and maybe get involved because they're afraid of missing out, right? We don't give a shit about that. We are waiting for the fish to come into our light. We are waiting for the price to come into our light. Otherwise, we are not getting involved in this because there's no point. We have our areas of interest. Those areas of interest are either because of our institutional higher order flow, because of our supply and demand areas, because of our order blocks that we have drawn in, because of our inefficiencies, whatever it might be, right? If those areas aren't met, we don't care until the price gives us more information. This will not give me or incentivize me to be in that price in the market at any point. Anyway, let's take a look. Price plays out and finally drops into this area right here. Okay, at this point, I actually believe I was on a 5-second chart just because of how fast price started dropping into here. And you'll see how long sometimes you can take to get involved on something, right? So we're not going to get too in depth on this. We got really in depth on it during the mentorship. And again, I don't hide anything from you guys. There's a little bit of extra stuff in the mentorship, but the YouTube has a lot, right? The mentorship is for the people that want to surround themselves with that type of atmosphere, have access to me, and have access to other traders, and of course have access to a little bit more information. But you don't need it, so don't think I'm trying to completely upsell or anything. Let's get down to a 5-second because at this point I think I was on a 5-second, maybe on a 15. Let's go to a 15-second to not make it too confusing. Yeah, ultimately what I started to see here was the same thing occur, okay? And we're going to go over this one a little bit quicker, but again, for those of you that have studied my material, we'll start to see what's actually going on here. So again, we have the selling climax and AR and ST, or maybe you can use this as a selling climax as your preliminary support, AR, ST, a bunch of lows being created, the ST and B being created right now, right? That ST and B gets created, right? Maybe you're looking for impulsive breaks up so you can start getting involved. Instead, we get a spring, fantastic, and then we get that impulsive break up, okay? That impulsive break happens, and then it happens again, right? So now we're ultimately, actually, hold on, wait for it, right? That impulsive break happens again. So now we're basically in a markup. And at this point, you could have already been involved easily at these order blocks here, at this order block here, at these order blocks here. Again, if the ones of you that know the mentfx blockway, you know that you guys could have been involved here already 2 or 3 times even. So that would have been really cool for those of you that know what I'm talking about. That's for the mentorship specific. So that's for that's for the people that are in it and understand what that is. Otherwise, you just be looking at these POIs as price breaks higher, right? Why? Well, you have an order block here. So this is what we're looking at actually. The order block here, an order block here, a structure block here, right? And we talk about that as well. Now we're waiting for one of those areas to be hit. Again, if one of these areas isn't hit, because unless you're already involved in this price, right? If one of these areas is not met now, I will not be a participant, right? So we're waiting for one of those areas to be met. Does one of those areas get met? Let's find out. So price is playing out, still not meeting any of those areas, right? So again, we can just move over here. Again, price is not meeting any of those areas yet, none of those areas, and finally it taps into that area. So at this point, again, we're watching for certain things. And on a lower time frame, what do you think you're going to start to see inside of here, right? Well, lo and behold, you know for a fact you're going to actually see, Wyckoff in this area again, okay? So let's delete these 2 POIs, they're not really important to us anymore. But if you got even lower here, you could see Wyckoff. I'm not going to do that right now. Use that as a resource for when you get off this, or do it on your own, or looking at your own charts. You might see something like this occur. Again, these are lower time frames. They all repeat. This 30-second price action is the same price action or this 15-second price action is the same price action that will occur over a longer period on a 5-minute, on a 15-minute, on a 1 hour, on a 6 hour, 8 hour, and so on and so forth, right? Even on the monthly. It just takes a much longer time to do it, right? So once you finally understand that, that's when you start to be able to take advantage of the market. Ultimately, we have a tap into there, right? Again, it comes a little bit lower. Structurally, we're moving lower. And then finally, structure begins to break. Now, that structural break right there happens from, as you can see, this block here, or for those that understand the mentfx way of entry, you know exactly where you'd be looking to enter right now with a little bit of a shittier risk to reward. And that's ultimately where your entry is. And at that point, we kind of just let price play. Again, someone in our group actually did catch this mark up, not with the exact location of price entry here, right? So you can see price actually comes into that entry perfectly. Never really hits SL. Again, keeping in mind that spread. Okay, so a lot of you have asked about spread. The spread does not matter, first of all, for buys, right? If you had your stop loss here on your broker, you won't get stopped out unless the broker actually makes a wick into that area, in which case you're either with a poor broker, with a broker you shouldn't be with, or you should be increasing your stop loss just a little bit, right? So again, it's a 0.4 pip stop loss. The spread on this was about 2.2 at the time, I think, or something like that. So again, when you enter this, you'd be entering with potentially a 2 or 3 pip risk, right? But ultimately, the reason I'm not getting into all of that right now is because the way that we enter this on a 15-second is the same way you could enter this on a 1 hour, right? If this opportunity presented itself on a 1 hour, right? And if you did that, then that 1 hour setup, this 0.4 would just be 40 pips instead, right? So forget about the actual numbers here. Forget what time frame we're on. Just remember that price action is fractal and will occur the same way across everything. The only thing that's required of you is to, one, not revenge trade it, not to psychologically get attached to a certain number, and instead have your areas pinpointed and wait for the fish to come into your zone before you eat them. Let price come into your area before you watch it. One of the most important things I can tell you. And again, we go through all this stuff in our mentorship too. But yeah, so, and then from there, we basically have the markup occur, right? And you might be getting involved on the OB 2.0s that form along the way. And ultimately, you just have this completely crazy markup that occurs, and it runs for a ton of RR. But what I need you guys to take from this isn't the fact that this entry didn't happen, right? So again, like I said, someone got involved for a buy, I think off of this block actually here, right? And they got in with a little bit of a bigger RR, so they maybe made, less RR on it for sure, but that's not what should be important. What's important to you guys is that the entry criteria here that got us in is the same entry criteria that we would use almost every time to get involved in a certain trade, okay? So that's what's going on here. And the main purpose of this video is to ultimately explain to you that a break even, so again, let's zoom in again. Actually, let's get to a 5-minute chart so you guys can see this a little bit better. There we go. So the main point of this video is actually to explain to you guys that break-even trades, or even tiny trailed profit trades, so as you saw right here, which actually look like a loss, are considered huge wins for you. Why? Because if you spend enough time studying the way you want to get involved on trades, studying how you're going to get involved in them, how you're going to find your POIs, right? However that may be, doesn't really matter. We've spoken about a few things earlier in this video. Then you know that over enough trades in time, your RR is going to be positive, right? With that in mind, a break even or tiny stop profit or whatever is a win because you know the next one could be a much higher RR or just less. You're ultimately making money if you're breaking even, right? It's almost, it's the greatest feeling ever. On the other, and you also know that you're doing your analysis correctly, and institutionally it's correct, right? You're going to have perfect setups, and they're going to lose. You're also going to have perfect setups, and they might not tap you in. You're also going to have perfect setups, and they're going to tap you in and run for high RRs. RRs that you're going to partial at early because you don't know if they're going to run, or that you're going to break even at early because you don't know that they're going to run, and that are going to run and make you feel amazing because you've caught something properly. Or you're going to have setups that happen that you partial properly, right, at a small area, and then it runs for a much bigger area in that last bit of that you left on, whether it was 50%, 60, 70, whatever your percentages are, right? Watch my risk management video if you want a little bit of perspective on that. Then that's how you get to be involved in that trade. So again, this was a little bit of a longer video. It was basically a breakdown of how you can, again, be getting involved, how you can be confirming yourself, and how losses, or not even losses, how things that look like losses that become break-evens are actually one of the best things that can happen for you. And of course, to give you the little psychological element of, one, to partial, to take your emotional side away from things, because it's very hard, unless we're literally Buddhist monks, to get out of that. And at which point, if we're Buddhist monks, we really don't care about money anymore, right? Because we just eat fruits and meditate. So, none of us are monks. None of us are that psychologically great. So let yourself take a piece of the cake off so you don't have to worry about getting some of it later, right? Or earlier, and then missing out on a completely insane move. And again, the most important thing is wait for your positions to be met. Be the fish that waits for the other little fish to see your light and then eat them. Don't swim around like a dumbass wasting your energy, right? Don't enter randomly on impulses because you think that it might not come to your point and you're going to miss out. Wait for that point to be met. Conserve your money, conserve your energy, and then get involved properly. Have a set rule, right? Thank you so much for watching, guys. This was mentfx. I'll see you guys in the next one. Have a great week, and I'll see you guys. Thank you.